All right, welcome to another trade of the week. Steve and Andy with you here. We'll just get going through the slides quickly, and then we'll get into it. Just a reminder, we trade our own accounts. We also work at Trade Ideas, but Trade Ideas itself is a software as a subscription company. And we're going to talk about a few stocks and charts, but none of it is to be construed as financial advice. You don't want to do that. You want to seek the professional people who charge you a fee. Now, just a reminder that we've got a lot of opportunity to pull up a chair and get familiar with the program and help shorten your learning curve. Primarily Barry's room every single day. No question is really left unanswered. He's very generous with his time, and there's a good group of traders in there as well that are good kind of pack hunters as day traders. So you can pull up a chair anytime during the day. It's free and get information that you need. Otherwise, we give Barry a break each day at noon. One of the 5 or 6 of us will come in and kind of give a different perspective on things and help you with trade ideas, questions, or whatever you guys want to talk about. But we try to make ourselves available, and we're always there. So please remember that this is available to you. And the link on the next screen here will show you the bottom, trade-ideas.com/live is a redirect to get you to the live stream, and then YouTube will remember who you are and that you like that. All right, so hang on one second. All right, sorry about that. Man and machine combined, just our regular little theme slide here before we enter the webinar. Just a reminder that it's very difficult to be these days successful as just a human with no help. But when you've got a machine or technology to help you, the two of us working together are really the way to go. Especially Trade Ideas specializes in serving up real ideas in real time for opportunity. And then from there, you are a better manager of the trades for sure as things change in real time and nuances change. All right, so the agenda for today, typical as usual. I'll go over the market recap here in a moment. Andy has some thoughts on AI recap. We'll look at the trade of the week. And then we've got a new scan, not a new scan, we're going to pull up an old scan, but try and really tie it all together as to why it's necessary right now to try and shift gears a little bit. All right, so let me get my chart up here with the proper moving averages and such. Stretch it out here a little bit. All right, so S&P, you know, there's really no case to be short, as I like to say sometimes, but we're up here in thin air for sure. And we've had, 2 or 3 days of pretty good run, gap and run, gap and run, and nowhere really to go today. It's just kind of a pause holding pattern. And I wouldn't be surprised to see maybe a couple more of these or just a little bit more, until the moving averages come up to catch it. That's just the way things have been going. It's just a matter of really how deep is that pullback or consolidation going to go sideways. But along the way here, there were a few periods, a moment, where you guys, when we were talking here in the market recap, where I was in extreme defensive mode. And I think, these 3 periods, I was saying, hey, I don't see any reason to really be long right now. So I'm pulling a lot of longs off and I'm sitting in a lot of cash and maybe a couple of hedging ETFs here and there. But, once they started to work, they quickly reversed on me and I got out and I said, all right, got to stay long and look for the setups again, once again. But each time this happens, as we come out of these movements, it seems like the individual names just don't want to really follow what we've had going here in the general bigger picture. And I'm not just saying that for myself. Andy will certainly corroborate that, and a lot of the other guys here on the swing trading accounts, we've been saying the same things. Market's up 1.5%, 2% today, and my stocks are down 2%. What the hell's going on? So something is levitating these indexes higher, but the leader right now continues to be the S&P, and of course the Dow as well. Again, up here in clean air, no reason to be short. But the interesting thing was last week when we spoke, the NASDAQ and the Russell 2000, we'll look at in a second, were both still under pressure. Many rejection wicks here in the NASDAQ and the Qs at that 50-period moving average, which I often consider the general health of a stock or an index in this case. And back then, week, 2 weeks ago, it was still a little under pressure. And I used the word, or Brian Shannon's word, guilty until proven innocent. Well, it proved to us it was innocent. And you can't stick no charges on the NASDAQ either, because I said once we start to see a close above that area that had been defended so hard, There it was right there. You know, if you were short and you were waiting for tech stocks to roll over, that really was your cue to start getting out and protecting what you can, because you can just see the follow through here. So there is no laggards anymore like there was in the last couple of weeks. Everything seems to be just finding a way higher, and technology was really kind of in the back seat, and it found a way to recover as well. And the I'm sorry, the Russell 2000, I'll go back a couple of days, is what it looked like, a couple of days ago. And I said the same thing. These small cap stocks, everything that was so easy in November, December, the small cap runs and the momentum runs and the EV stuff was just crazy. But now we're on the underside of health here. Odds would favor it might not do it, but wouldn't you know it, this market just finds a way. We're back closing above these moving averages. So there's really nothing that you can point your finger at this point that's lagging for the most part. Some interesting notes. Some of the gold miners were kind of popping up again today. One of the things I'm watching, and Andy's watching too, are the interest rates. And there's two ETFs you can use for that. This first one is the 20-year Treasury bond. And what I see coming up here would be a pretty good pivot level, something like that. So if we start to close above that orange line again, well, maybe the interest rate rise that people are talking about is not going to happen. You can also look at the IEF, and this is much more of a downtrend, having a difficult time as well. This is the 7 and 10 year. This is really where all the mortgages are based off of. So if you're out there waiting to refinance or looking for a mortgage, and you see this ETF start to get down here in this level, chances are you're going to start reading headlines again about interest rates. So just a little side adjunct there, because everything else here in the ETF land for the indexes is just telling you there's no reason not to be long and there's no reason to be short. It's just a matter of what you're going to pick. And we'll talk about that coming up when we get into the rotational type stuff. Anything you want to add, Andy? I think I got a direct message from a trader today that said, I knew I shouldn't have bought something today. So buying up here, yeah, I mean you don't want to load the boat up here at these levels and we channel. So if you like something here, dip your toe in, but maybe wait for that or whatever is coming around the corner. I don't know. Sideways would be the best. All right, well that's all I've got there. Let me pass it over to Andy. You can go ahead and yeah. I don't know. What did you do? It's all right. That's not a problem. Light day, as you said. All right. So before we get to this week's trade of the week, let's have a little fun at Andy and Steve's expense, and Chris Farley's expense, and Jamie's expense. um, let's go back in the time machine a little bit there. All right. So last week we were looking. Of course, it's gonna freeze up on me. Last week we were looking at a pretty nice little flagging pattern in box, just going back and forth, sideways action, which was the official trade of the week. There we go. And we had that, really going into Wednesday, I think was that look. And I said, boy, this is trade management here, okay? That was already set up, and then that was our test. All right, so we had 3 tests there, and we were definitely long the trade of the week box at this point last week. And I always like to see it touch at least once. And again, it gave us 3 touches of that moving average, the 10-day moving average. Really expected this to go. And now, in the back of our minds as traders, we all want to avoid pain, of course. And we've been talking literally, as I said, weeks on end now. Why are my stocks just soft? Why are they not following through when this market keeps going to highs? And a lot of these setups just aren't working as well as they did back in November and December. We all remember, I mean, this market was just buy the momentum, look for consolidation, and go. And it made it really seem easy. There were some really good picks, but I mean, there's been some soft picks for the last month. And so that being in the back of my mind, and also telling you guys about my rule that I like to follow, which is once a stock closes, emphasis on closes, below the 10-day moving average. In this case, it was actually the risk parameter that we called out in the trade plan of last week on this was to go ahead and ditch it because we don't want to stick around for all the way drop down to this red line, the backstop of the 20-day moving average. So why stick around for that? If things aren't working, be very defensive. And so that was technically by a few cents a close. And again, I was running out of patience on this, and I think a lot of the other guys did too. So we got out, and the gods of the trading world just have a funny sense of humor to where by Friday we were all just looking at each other, kind of shaking our head. I mean, that was just close enough for government work, but we were all just so skittish about these things that did fail and did find that backstop below. Well, in this case, it really didn't, and it got one more day today, yesterday, excuse me, there. So if you're still in this trade, bravo. It's still above that moving average if you don't count that day where I got out, and it still could go. But I tell you, you're probably going to wait for some more consolidation after a couple of green days there. All right, so that was last week. Coming into this week, honestly, I really didn't see a whole lot of scans. And again, this is kind of the content for today. I don't really trust a lot of the setups that were working with those sideways actions after a move and then asking it to do it a second or third time. it feels like the market was just running out of steam, running out of air. The air is getting thin up here, and so these individual names are kind of showing the real true colors. So Regions Financial is the name of the stock, and this was literally kind of more of a group effort because I didn't really see much that I liked, and talked with some of the guys over the weekend, and we all kind of agreed that regional banks were looking really interesting, and a lot of the names that were coming up. I think when we even looked at the sectors last week, we talked about how the strength of the regional banks were holding up. And let's backwards into the market recap. If interest rates if this TLT rolls over and IEF roll over and interest rates start to tick up, some of these financial institutions might be okay with that, and that might be showing up. So the other point I want to make on this one is it doesn't look as clean as a lot of the other ones that we had, but Andy pointed out Regions Financial compared to some of the other ones has a real nice cash balance sheet. There was a lot of good stuff on the single stock window. But I'm just going to draw like those simple crude lines that you always see traders talk. I mean, that's kind of what I see. And in that respect, our timing might not be perfect here. Because yes, it did trigger yesterday, and let's talk about that in a second. But this is the bigger picture that we're looking for here. And as long as it holds up to what it gave us in the past, it showed us in the past that the 50-day moving average seems to be where the buyers are going to step in. Well, we're going to let this thing work for us a little bit. Somebody asked me today, well, why wouldn't we just use what we've been using before, Steve, the 10-period moving average there? Well, I just think that's really too tight in this case. I think you just need to kind of downsize your shares and look at this for the bigger move that might be coming. So this might not be one that's going to work this week necessarily. It might just ideally kind of do some of this, and then before you know it, the financials are going to be in the news. Maybe interest rates pop up, and before you know it, all of these wedges that are appearing in these financials and these regional banks will resolve themselves. So we're really kind of just picking a side here, hoping that anticipating that this movement will continue higher when the time is right. But it's not really a perfectly timed trade in that respect. Okay, the entry. Another week where we had the entry at let me do this real quick. Let me grab this and put that. And this way I mirror a lot of my trades. There we go. So the entry was literally pretty much right around there, I think. The stock opened up way up here, traded up as high as here, and then all the way back down. Well, let me just point something out. When we get a gap up like that, there's a couple different ways. When we call a trigger to come up from underneath and push up through it, that's what I want to see. I want to see the price move up, and that's our trigger. When the stock gaps up like this, I went ahead and I bought the trigger just to be disciplined, but I kind of kicked myself because I thought, actually, let's use the reverse wheel here and see if we can get a better understanding. I thought, I bought it there because that was our trigger from the underside. Looking back on these candles, pushing up through there would be a nice momentum push, but we gapped up and then sold off. Well, doesn't matter. I still bought it there, but kind of wish I just waited for what I normally have been talking about with you guys week after week. The gap into that moving average right there, and that probably would have been a little better place. So I wouldn't blame you if you let it do that. I kind of wish I had. Would have got a little better price. But then we've just been going sideways, as I said. I do want to point out, though, this 5-day moving average is on my 15-minute chart. It's giving us a very nice confirmation that still healthy, relatively healthy for the most part. So we're positioned, we're biding our time. We're just waiting for maybe a nice headline to boost these financials and get them going. Anything you want to add on the trade of the week? No, I didn't. I'm pretty sure that I bought it there. I might have bought it in the other account a little bit later. I did. Yeah, I didn't chase the open, but I let it come back. And what I'm saying is on the drop down, go ahead and disregard that trigger on the drop down because as I said earlier, guys, as man and machine, right? The human being understands there's more dynamics to this open here. It's kind of a different open now, and maybe we could get a little better price if we just kind of do what we see price action do week after week in many stocks. Catch that moving average on the gap fill, and you can get a little better entry. But I jumped the gun a little bit. I know what you're talking about. In the other account, Andy, I think I bought it down more like this. Yeah, more of a gap fill, which is another spot to look at it, the actual gap fill. I think that's actually where I was kicking myself for at least not waiting for the gap fill. Anyway, all right, so that's really the commentary on this week. So next week, I'm not going to go to the A table. I'm not trusting it because we've talked about this rotation in the market, and if there is rotation in the market, we're going to have to rotate our way of finding stocks and play into the hand of rotation, meaning strong stocks that have pulled back and have seemed to have found a base and might be moving back up. Some real saucer bottom type stuff. One that comes to mind, and I think it's actually on the scan that we're going to look at, is everybody's favorite Peloton, the darling of the COVID, given back a lot since being up here, but really, really having a nice rounded bottom there. So let me introduce then Andy's scan that he made a while ago, and we're going to just kind of pull it out of the locker here. Where'd it go? Revenue fishing. Revenue fish. Why can't I find it? There it is. Revenue growth fishing. So this is a scan that Andy made. Let's first always, it's a top list window, meaning it's just a list of ideas, updating every 30 seconds. But what did he configure here? So here's our filter set. All right, so anything above 5, you could put a cap on it if you don't want to see Peloton type stocks. Average daily volume is 500,000 shares a day. And then let's hide the unused and see. This is where it gets interesting. So the position and range filter we talk a lot about is a very solid, very cool filter because you can group different time frames and see where you want the price to be in those time frames. So in this case, maximum 30%, that makes sense for Peloton. In the 3-month range, it's definitely not more than in 30% off the lows of that 3-month low. So that kind of keeps us only focused on stocks that might look similar to Peloton. Revenue growth, got to have at least 17% revenue growth. So you're a solid company. You're probably just suffering a cyclical pullback in the cycle of the way price action moves, and it might be setting up for a nice rotation, as we were trying to circle back to. Rotation into things that might make sense that the big guys are looking at. And then lastly, position in the 10-day range. This is key. Now we're only looking back 10 days, and we're saying we want to be in the 70th percentile or above. No more than 70% above the lows, all the way up to a 10-day high. We'll take that, and so things might be heating up. So it kind of gives us, as I said, that look right there. My machine is freaking out. I'm going to close this. Close that. All right. I'm going to close that too.